Okay, and we're live. So hello again, welcome to another Red Cloud webinar. My name is Kobe Kushner and I'm a mining analyst here at Red Cloud. Today we're joined by Chris Evans from Winsome Resources. Chris is an engineer by trade, but has progressively worked through project management roles, particularly in Australia's lithium space. He joined Winsome Resources last year and he's helping to guide the company as it delineates hard rock lithium resources in Quebec. Before we dive in, I'll give a brief intro on lithium. Again, I'll be brief. So I think most people on this call are well aware of what lithium is and how demand from end users, particularly EV makers, have pushed lithium prices to record highs in a very short time frame. Supply continues to be incredibly tight. The International Energy Agency put out a report this summer stating that we'll need 50 more average-sized lithium mines by 2030 to meet global carbon emission goals. Benchmark Mineral Intelligence similarly says that we'll need over 70 more mines to meet 2035 demand. Now, building a new mine takes time. While there's plenty of new entrants in the space, there's not that many that are actively drilling right now. And when we think of lithium in Canada, some may immediately think of Quebec, and that's because it's home to a couple mines that are expected to have a restart in the coming years, North American Lithium and potentially Whabouchi as well. And Quebec is where Winsome is actively drilling right now. So during today's webinar, Chris is going to provide us with an overview and an outlook. And when he's done the presentation, we'll move on to the Q&A session. And a reminder that you can type your questions into the comment box at any time. As always, we have to first run through the fine print. So during this webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on the company's corporate deck, which we will see momentarily. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red website for specific disclosures on Winsome. And with that, I'll now turn it over to you, Chris.
Thank you very much, Kobe. Appreciate the introduction. And thank you everyone for your time today while I talk through Winsome Resources. And I think it's quite a story we've got being lithium focused in the James Bay region of Quebec, primarily. And I think it's been quite a journey that we've been on over the last 11 months since we listed on the ASX in November last year. I would fully endorse Kobe's suggestion that there are forward-looking statements and his cautionary statement. Please do your own research and please take the time to read through our cautionary statements at the beginning of this presentation, which will be available afterwards. I think it's worth, first of all, going to a little bit of background for Winsome Resources. As I said, we listed on the ASX on the 30th of November last year, and we're a spin-out from another ASX. It's a company called Metals Tech. Metals Tech held the three assets with which we listed, which was Cancet, Adina, and Cermak. They held them and drilled two of the projects, Cancet to a considerable degree, and also Adina back in 2017 and 18. Found fantastic grades of lithium and tantalum, particularly at Cancet. But then when the lithium price crashed, they moved on to other priorities, and the projects largely sat dormant from 2018 until the beginning of last year. When Metals Tech approached me as the lithium price started to rise, they decided to spin out the assets. They approached me to run the spin-out process and then subsequently run the new company, which is Winsome Resources. I was approached because I have about 7 years experience developing hard rock lithium mines. First of all, I was Chief Operating Officer of Altura Mining. We built the Pilgangoora mine in Western Australia. I was fortunate enough to see that all the way through from pretty much the stage we're at now at Winsome, just about to get a resource, all the way through into production. And I think that's quite valuable experience to have in today's market, and reasonably rare, I think I can say. And then subsequent to that, I was managing director of Marley Lithium, what's now Leo Lithium, and oversaw definitive feasibility study of the Goulamina project in West Africa. So I have a reasonable amount of lithium experience, and as I started to look into this project, I saw more and more positive attributes that really got me interested. And most of them are on your screen before you now on the left-hand side. At Canset, our flagship project, there'd been about 5,000 metres of drilling done when we took it over. There'd been really fantastic intersections right from surface. There's a huge outcrop at Cancet, and I'll go into that in a little bit more detail later in the presentation. It's characterised by huge spodumene crystals, which is where the high grade is, and that gives us great metallurgical test results, which again I'll talk about a little bit later. Very high grades of lithium. We have intersections of 17 metres at about 3.7% lithium oxide at Cancet, along with high grades of tantalum up near 1,000 parts per million. Quebec itself is a fantastic area in which to be establishing any mining project, but particularly a battery materials and lithium project. We have great support from the government. We get 38.5% tax incentives or tax rebates from the government on all exploration expenditure. Infrastructure's in place. We have Hydro-Quebec power lines passing through our claims, which can be brought down for use as renewable energy on our projects. We've got the Trans-Tiger Highway passing right through Canset, and I think lithium in general is a great place to be at the moment. So I became very interested in the project and the jurisdiction in Quebec, agreed to run the spin out, and as I said, we listed in November last year. We put the EV of the project, valued the assets at 9 million Australian dollars and aimed to raise $18 million. We were massively oversubscribed in the IPO, so we took the full 18 million at 20 cents, and as we sit today, our share price is 52 cents, which puts our market cap at about 75 million Australian dollars. We've had pretty good trading volumes over the last month with over 1.5 million shares traded per day, good liquidity there. And of the 18 million, we've got about 12 million left in cash at the end of September. So we're well funded to pursue our exploration activities for the next couple of years without having to dip into the equity market if we don't wish. I'm not going to cover global trends in lithium because I think all of you have logged on today, as Kobe said, probably as well, if not more, informed as I am on the world lithium market and the demand. Before I go into detail on our project, I'd like to talk about what I think of as the trifecta of success factors that we have at Winsome that I think sets us apart from almost every other lithium play in Canada. And I think the first one is that we're lithium focused. That's a fairly obvious success factor. Any company at the moment who's focused on lithium and has a real line of sight on good lithium assets like we do is going to be set up to some degree for success. The second one, which I alluded to before, is that we're ASX listed, but we're Quebec focused. And the reason I mentioned that one, and I consider that a success factor, is I definitely see other lithium assets owned by peers of ours who are listed on the TSX who haven't received the support that we do being listed on the ASX. And by support, I mean not only the money, the investment funds we were offered at IPO, which still remain there for the future if it's needed, but also I think ASX investors are a little bit more bullish and have woken up a little bit earlier than perhaps Canadian investors so far towards funding battery materials. So I think that's a really another success factor. And then the third one, which sets us apart, is that we haven't yet got a resource on our books, but we know we've got great quality lithium assets and we're just pre-resource. And that's the value factor for investors, as far as I can see, and sets us apart. There are other companies with the first two success factors, but there are none, I don't think, who are just pre-resource, whose share price hasn't had that big increase that tends to come with a resource on your books, which we're aiming for next year in 2023. As a company, we're looking to grow in three ways. First of all, our bread and butter is developing the three projects that we listed with, which is Cancet, Adina and Cermak. And we've got a huge amount of exploration work. We've done a huge amount in the last 12 months. We've got a lot ahead of us to develop those projects. The second one is greenfield acquisition. As everyone on this call, I'm sure, knows, Canada's a huge place and there's still massive unexplored areas with a lot of data available over them due to all the surveys that have been done and the exploration work for other commodities over the years. So we've capitalised upon that to some extent by acquiring two new projects since we listed, Cancet and Adina, and they are both located within an hour of Val-d'Or and Rouen, further to the south in Quebec. They are characterised by big granite outcrops. We know that other companies like Sayona Mining, Brunswick Exploration, and Vision Lithium have all found lithium in the area. It's a very fertile ground, and we need to get around to exploring that, which we're currently doing, and then we'll pursue further next summer. And then the third way for us to grow is to acquire new projects. And we think there are some of these in Canada, which, as I alluded to before, perhaps don't have the ASX support that we do, have a relatively advanced lithium projects under their belts. So we believe we could bring our expertise and ASX support to potentially acquire some of those, and we stated that right from our IPO. So they're the three ways we intend to grow our business over the coming years. Since we listed almost 12 months ago, I think we've achieved a lot. And it's only, I would say, in the last month or so that our share price has really started to pick up. And I think that's because the hard work that's been done by the team over the last 12 months has really come to fruition. Now, that work's consisted of, first of all, we appointed a country manager, Carl Camartin, who's now our VP of Exploration and General Manager in Canada. He runs our operation in country. He's an experienced geologist and runs all the exploration work. We have done geophysical surveys, exploration field work during the summer, all to generate exploration targets and to start drilling on the ground. And we started drilling literally 2 weeks ago at both Cancet and Adina, our two flagship projects now. And they're going to be our main focus for the next 9 months. So to jump into the projects themselves, as I said, we listed with Cancet, Adina and Cermak, and they're the three orange projects or orange stars you can see in the northern part of the map of Quebec there. Within the map, you can see other well-known projects that many of you will be aware of. Rose Project, James Bay, was owned Galaxy and is now Alchem, and Sayona's Moblam project. Cancet and Adina are the two new projects we acquired since listing, which are further south near Val-d'Or. When we acquired Cancet and Adina, there had been about 85 holes drilled for sort of 7,000 metres of diamond drilling. Not quite enough to define a resource at either project yet, but enough to let us know that there was great grades of lithium that I referred to before. So in some cases, over 3% lithium oxide right from surface down to about 17 metres. Cancet, we can see a big exposed outcrop that stretches over several hundred metres, and we've since exposed that even further in the summer, exposing well over 600 metres of strike length with huge crystals, and I'll show you some pictures of those shortly. Adina is a traditional steeply dipping parallel series of dikes, but when we acquired the project last year, only about 1,800 metres of diamond drilling had been done. So as I said, for the last 12 months, we've been doing a lot of groundwork to make sure we've got targets to I think, really focus to this point now where we start directly adding value to the business And that's by having a drill bit in the ground at both of those projects in the north, Adina and Cancet. At Canset, we have 395 exploration claims, and the work you can see, or the area, the colourful area you can see in the centre of our claims there represents a magnetic survey that was done a couple of years ago. And interestingly, we see a magnetic high right around where the pegmatite is. And in the blow up, or the inset, you can see the colourful inset, or the black dots represent drill holes, and the pink area is the magnetic high, which is the mineralised pegmatite. On the left-hand side, you can see a picture of that exposed outcrop right where the drilling has occurred, and you can see a large spodumene crystal larger than the size of a rock hammer there. Based on the drilling that had been done, that sort of 5,000 to 7,000, well, it was 5,000 metres of diamond drilling at Cancet, we created a block model of the ore body, and that's that. You can see that represented on the lower left diagram, and you can see it's still open at depth. We haven't drilled much more than 100 metres at Cancet, and it's still open to the south. Over the summer, we've also done a gravity survey at Cancet, and we believe we're one of the first hard rock lithium companies to use gravity to identify pegmatites. What we've found is we get a real gravity low over the pegmatites. And the third geophysical survey we did over the summer was a LiDAR survey, and that really shows the topographical relief in the ground. Because where there's pegmatite outcrops, and not even outcrops, where there are pegmatites present, there tends to be a topographical high. So when we overlay the magnetic survey, the gravity survey, and the LiDAR survey, we generate a whole lot of targets. And that is shown, I think, on the right-hand side. So that is a Google Earth image with our Cancet claims in blue. The green squiggly lines are the pathways our geologists took during their summer field exploration campaigns. And then the white dots you can see are targets that have been identified during that summer campaign. We've got about 20 of them now. And 2 weeks ago, we brought in a heli-mounted or heli-transportable reverse circulation RC rig to start investigating those 20-odd pegmatite outcrops that we discovered during the summer. And really the purpose of that RC rig is to put a couple of holes in each outcrop and determine how thick the outcrop is and is it mineralised. And using an RC rig is relatively rare in Canada, as many viewers may know. Diamond rigs tend to be almost exclusively used, whereas in Australia we use RC rigs much more frequently. There's a variety of historical and practical reasons for that, but nonetheless, I think for this sort of quick exploration campaign, an RC rig is ideal, and it's working particularly well. I've got some photos to show you in a second that illustrate that. The left-hand picture shows the mineralised ore body we've discovered so far at Cancet through this 5,000 plus metres drilling. During the summer, we stripped it back, as I said, removed vegetation, and we've got 600 metres of it exposed now. If you look at the bottom of that photo, you can see, it's not particularly clear here, but hopefully you can see the very large spodumene crystal, which is that grey mass running along the bottom. It actually says spodumene there. I think I might be able to mark it up somehow. It's actually, if I circle it on the screen now, hopefully you can see that. Now we've done 3 rounds of metallurgical test work from core taken from this area. And the purpose of that metallurgical test work is to determine how well the pegmatite, the mineralised pegmatite in this area, responds to heavy liquid separation in the lab. And heavy liquid separation is the lab version of dense media separation. And because of the very coarse grained nature of the spodumene here, we've got fantastic results. The last round of metallurgical test work we did we got 91% recovery using heavy liquid separation only. We then did a round of flotation test work, but it was almost nugatory. It was pointless because most of the lithium had been removed in the HLS. Now we find that really encouraging. The metallurgist who did our test work also did Sayona's test work at North American Lithium, and he's also done test work for Piedmont. He's never seen recovery that high, and I've never seen spodumene crystals this large. What that means, if we can translate that fairly directly into the field and get good recoveries above 80% from DMS only, it means we don't need a tailings dam. It means there's lower capital cost to build, easier approvals, and a quicker time to build, and also a lower ESG footprint in general. So we really like the fact that this Cancet project sits right on the Trans-Tiger Highway. It's very high grade, and it looks like it's amenable to DMS only. It's shaping up to be a fantastic project that could be very quick into operation. So the RC drill rig that I referred to before, as I said, is heli mounted. You can see in the central lower photo that picture was taken about 5 days ago. That's a typical pegmatite outcrop we see at Canset, and that's the drill rig working away. It takes about 6 hours to move the drill rig and set it up ready on a new hole. And there's a close-up of it, which I took myself on the left-hand side about a week and a half ago. The photo on the right, you can clearly see when the drill rig or the drill bit, I should say, moves from pegmatite into the surrounding amphibolite, that real transition from the lighter coloured pegmatite into the black amphibolite. So while it doesn't give all the structural characteristics of a diamond rig, there's certainly a place for quick drilling and rapid results to give good information on outcrops that we find all over the Canset property. Now, actually, I'll just go back to Canset before I finish on Canset. The drill rig, the RC rig that we have on site, will be drilling those 20-odd outcrops until December, roughly. And then from that point, we're going to bring in a diamond rig to investigate those outcrops which are of interest, which show mineralisation and merit further drilling with a diamond rig. And we've got a whole lot of infill drilling to do at the main mineralised ore body, which is that central area covered by the magnetic survey. That's going to be the main area where we start to build towards our maiden resource next year, in the first half of next year. And soon after we put out that resource, we have all the ingredients already to put out a PEA, a preliminary economic analysis. We've done 3 rounds of metallurgical test work. We understand the infrastructure, that the Trans-Tiger Highway is right there. Power is right there. So we know the transport solutions. We've done a baseline environmental survey at Canset. So everything's there for a PEA to be published, if not directly with, very soon after a maiden resource by the end of the first half of next year. One of the limiting factors we have at the moment, which is unfortunate, but it's a fact of life, is that assays in labs are taking a long time. The quickest we can get at the moment is 6 to 7 weeks. Due to the high volume of exploration work that's going on, not only in Quebec and in Canada in general, but all over the world. So that puts a slight delay on an ideal timetable for producing our maiden resource and PEA. Now, Adina has, until probably a couple of months ago, we considered Adina as a secondary project behind Canset because of all the great attributes that I talked about regarding Canset. The previous drilling that had been done at Adina was only about 1,800 metres. It showed good grades of lithium. Many of the dikes were above 1.5% lithium oxide, but they weren't massive. They were 10 to 15 metres thick, parallel to one another. But again, as I said, only a small amount of drilling had been done. And that previous drilling, if you look at the left-hand map and you look in that topographical high, you need to look closely, but you can see some green writing. That's the drilling that was done back in 2018. And there was about 15 holes done. The white dots that you can see on that left-hand map represent our planned drilling as of a couple of weeks ago. And we were going to do about 5,000 metres of diamond drilling at Adina. Now, again, on the left-hand map, in the top right-hand side of it, you can see a colourful sort of circle with some planned drilling over it. That's a recent discovery we made during our summer field exploration. That's the Jamar deposit. If we move to the right-hand side, you can see rock chip samples from the Jamar deposit and some of the results up to 4.8% lithium oxide. And that Jamar deposit was previously unknown. It's about 1.2 kilometres to the northeast of the previously drilled area. So that got us very excited. A well-mineralised outcrop that looks like it could be connected to the previously drilled area. If it is, that means the strike length we've got all of a sudden is a couple of kilometres long of potentially mineralised pegmatite. We discovered that in August. We got the assays back in August, I should say, which has got us very excited. And then we started planning some more drilling. Now, this is a zoom in of the Jamar deposit. So on the right-hand side, the red circle you can see is the outcrop where those rock chip samples were taken from. And the initial drilling at Adina is going to be in 3 groups in a sort of logical sense. The group 1 are the 3 holes the first 3 holes, part of which we published last Friday. And then we start to step out into group 2 and group 3, stepping out away from the known mineralised outcrop. Now, on the left-hand side, you can see a rendition from Leapfrog of where we're planning on drilling. The green outline is that outcrop as it expresses itself on the surface. The white lines are planned drill holes, and the coloured lines that you can see are pegmatite intersections we've reached. Now, there was a few questions based on our ASX release last week. Excuse me. We'd only drilled 4 holes at that stage, so we don't have a lot of information, and it's very hard to predict anything about what the pegmatite we hit looks like. However, the hole number 5, which was the most impressive pegmatite, you can see in the centre of that left-hand drawing, and that roughly over the first 170 metres, there's 160 metres of pegmatite. And I'll jump forward a couple. These are photos we put out in our ASX release, and it looks like a very nice pegmatite from that hole. Now I'll jump back again. I think to this photo is, these screenshots from Leapfrog are useful as well. On the left-hand side, again, you can see the 160 metres as that prominent hole from surface. We then drilled a hole at 180 degrees to that, which you can see going out to the left of the big hole. And we intersected about 30 metres. That's hole 5A, we intersected about 30 metres of pegmatite there. And that's to try and give us an idea about whether we were drilling down dip or not. Having intersected some at 180 degrees, it looks like to us that we're not drilling directly down dip on the first hole, but nor is it's not a true width either. We're too early to tell exactly where we are. But it's such a large intersection of pegmatite that looks attractive is very positive for us. You can also see on that left-hand screenshot another hole that we've started drilling. It's incomplete, but you can see we've hit some more pegmatite at depth on that, and the market will be informed when we finish that hole and drill some more. Excuse me. So before I move on to Cancet and Mazarac, at Adina, we expect, we've also done some gravity surveys at Adina. We haven't quite finished them yet. We'll inform the market once we have about the results of those. But so far, as we get ongoing results, we realise that there are much more areas to test. And also seeing the impressive intersections we've had so far, that's encouraged us to plan more drilling. So as we stand now, we have somewhere around 9,000 metres of drilling to be done at Adina with the current planned holes, and that could even go further depending on what we encounter over the coming months. So that'll take us well beyond Christmas drilling at Adina, and it may even mean that we bring in a second rig depending on how much we extend that program. But again, like any exploration drilling program, it's going to be an evolving situation that that will keep the market updated as things change. Over the fall, the northern fall now and the winter, we're doing a series of geophysical surveys on our new projects, Cancet and Mazarac. That'll generate targets for the summer, so that as summer comes and the snow melts around May, June, around Val d'Or, we can get teams on the ground to investigate targets and try to identify new mineralisation around Cancet and Mazarac. I talked about myself briefly at the beginning, my history, but we've been really lucky considering how hard it is to get resources anywhere in the world at the moment to assemble a really small, tight, efficient and experienced team at Winsome. Our chairman, Justin Boylston, has run a number of small cap, successfully developed a number of small cap ASX mining companies, and brings a wealth of experience into development of this nature. Dr. Qingtao Zheng has a wide range of experience with lithium. He has traded lithium from Western Australia, from several mines, from Altura, Pilbara Minerals and Mount Cattlin Galaxy into China. He runs another company, Australasia Metals, which has lithium interests. So he's well versed in the world lithium market. Carl Camartin is our VP Exploration, who runs our, and General Manager of Canada. He runs our operation in Quebec. He's an experienced geologist who, by working for BBA before us, he was actually exposed to the Namaska project, James Bay and the Moblan project. So he actually had lithium experience when he came to the job, which is extremely hard to find these days. And Peter Yude, our CFO and COSEC, has many years experience running companies like ours and is a chartered accountant. So we've got a great team, a small board, which keeps us agile, but allows room for growth when the time is right to bring the right people on board to grow our team. So I think in summary, the things that really set us apart is the fact that we've got two flagship projects in a prime jurisdiction that is Quebec. We get 38.5% of all of our exploration expenditure back in tax credits from the Quebec government. We've got hydropower lines passing right through our Canset project and right immediately adjacent to our Adina project. Canset's on the Trans-Tiger Highway. We've done 3 rounds of met test work that show that Canset is in particular is very amenable to dense media separation only. And we've got great support. Lithium Royalty Corporation cornerstoned our IPO, and they're big supporters of ours in North America. I think that concludes the formal presentation. I look forward to taking questions. Kobe, if there are any.
Yeah, no, we definitely have some questions. So thanks, Chris, for the very informative presentation. And as you alluded to, we'll now start the Q&A portion of the webinar. Just a reminder to everyone on the line that you could type your questions into the chat box at any time. So we'll start off at a high level here. So, you spoke about the merits of Quebec, government support, hydropower, access, tax incentives, etc. But Quebec is also probably the most active jurisdiction in Canada in terms of hard rock lithium exploration. So is the focus on Quebec a natural consequence of its lithium potential, or was it somewhere a deliberate decision based on reasons I just listed?
I think the circumstances of previous ownership, I think Metals Tech previously owning these projects, that they chose this area to invest in initially and start exploring exactly for those reasons. And we have acquired the 2 new projects, Dessel and Mazarac, for those very reasons as well. But I don't think that limits us only to Quebec. I think Canada in general, Ontario, Thunder Bay is a very busy area at the moment, and has many of those same attributes, as does Manitoba as well. So I think for future acquisitions that I referred to, we certainly wouldn't limit ourselves to Quebec only, but Quebec is a fantastic jurisdiction.
And what's your drilling season like?
Drilling can be done all year round. It can be difficult to track land-based rigs during the melt and the thaw. The ground can get boggy, and there are numerous lakes dotted all over our claims. So right around now, as the thaw is setting in, it can be tricky to move, but we've got heli rigs, so we can continue drilling continuously. And during the melt in May, June, there's about a month there. But the winter itself can be more conducive to drilling because the lakes are frozen and you can track rigs straight across them. The part of exploration you can't do during winter is there's 5 feet of snow on the ground, so you can't see the ground, and field exploration is limited to the summer months. But that works pretty well in Canada. Teams are on the ground in the winter, and then on the ground in summer. You can also be drilling then, but then you tend to turn all your resources into drilling in the winter time.
Right. Okay, and someone wants to know about your plans for a U.S. listing. Are you looking at the OTC market? If so, are you looking at the QB or the QX?
It's been a frustrating process. We listed on the Frankfurt Exchange in January this year, and soon after that we applied for the OTC QB, and they insisted upon us having full year audited accounts before they would accept us. Now, despite us explaining that we hadn't been listed a full year and we didn't have those, we just passed ASX compliance, we still had to wait. So we've just submitted our full year accounts, and we expect to be listed on the OTC QB within a matter of weeks. Okay. And I think to take that one step further, sorry, Kobe, I think at some point in the future it would make sense for us to list on the TSXV, but not for no reason. I think as we develop the project further and gain a bit more momentum in Canada and perhaps need a final investment decision or move towards a big money event to raise money for construction, then it would make sense to list in Canada as well.
Right. And, I hear this a lot, that ASX companies trade at premiums to, those listed in Toronto. And I've also heard different theories as to why this is. So, previously I thought it was Aussies are just better miners than Canadian miners. So no offense to my fellow Canadians. But I've also heard that the premium isn't actually real. It might just be a function of different discount rates used. So I guess what's your take on the Aussie premium? Is it real? And if so, why does it exist?
I think it is real, and I've got my own theories. I'm happy to share them, but I'm not an economist, and these may or may not be true. My first theory is that Canada has not had a successful lithium story yet. It's had a couple of notable failures, in fact, Nemaska, North American Lithium. And so I think some investors, Canadian investors, are a bit jittery about that, and Canada needs a good news story on the lithium front, which we've had in Australia. So a lot of Australians have already made money out of lithium, and during the last boom in particular. So as a result of that, Australian investors are a bit more willing to have a punt and throw their money, particularly on earlier stage projects like us, which have the potential there to really grow. And having looked at other success stories, we could be that same story. So Australian investors are more likely to go there. I also think I'm not sure why. I don't think Canadian investors are quite woken up to battery materials yet and the revolution the way Australian investors have. There's probably a whole host of reasons behind that. And I still think there's money tied up in the whole marijuana investment cycle that occurred in Canada. They're my reasons. They may or may not be true.
Yeah. Maybe people are a little afraid of any kind of high growth industry, but I look at the cannabis sector and I think people overestimated the demand, and I look at the lithium sector and I think it's the opposite, right?
Yeah.
And that was an interesting take with, Canadians are, when they think of lithium in Canada, they might be thinking of the two big failures that we had. And both of them were in Quebec. And I think the Aussies really figured that out the last cycle. Don't try and go midstream or downstream. Go right for the concentrate. Send that off to someone that's actually able to, that knows how to do that well. So
I think it's a case of walk before you can run, and don't get too carried away early on.
Yeah, agreed. So, Winsome is well financed, but drilling isn't cheap. And one thing investors are cautious about is share dilution, especially in this market. You mentioned it before. So, just remind us, how much cash do you have and how far out are we from when you'll need to return to the market for your next raise?
We have, at the end of September quarter, we had $12 million Australian left in the bank. And that's pretty much in line with our estimates at IPO that gave us almost 3 years of operating at the level we expected to. So with the 12 million, that gives us about 2 years left. If we keep exploring at the current rate. Now, that means we don't have to dip into the equity market if we don't want to during that time. Now, as you know, exploration is pretty dynamic and things could change. To minimise dilution in the event that we do go to the markets, we've set ourselves up for flow-through funding from a tax perspective. And for those people watching who aren't familiar with flow-through funding, it's an amazing tax incentive set up by the Canadian government to encourage exploration. And it uses, through a few forms, but primarily through charitable giving, the Canadian government provides tax offsets which directly benefit us. And for example, if we were to raise money through the charitable flow-through funding scheme at the moment, given that we're a critical mineral in northern Quebec, we could raise money at twice our current share price. And that differential is funded by the Canadian government. Now, all that money's got to be spent in the ground on eligible exploration activities by the end of the following calendar year. But it's a fantastic scheme that really minimises dilution if we did need to go back to the market at some point. If we decided to have, if we made another amazing discovery and we wanted several more drill rigs there and we thought it was worth doing that, then there might be various valid reasons that we want to do that. But we'll see how our exploration develops.
Right. Okay. So, Let's moving on to the projects now. We'll start off with Canset. Looks like you've hit some high grades there before, but you've also had fantastic metallurgical results. And what I've learned is that having high recoveries can make up for lower grades, but in this case, you've got both. You've got high recoveries using presumably DMS eventually, and then high grades as well. So can you touch on maybe what you have, what you think the recoveries and grades will be, and benchmark that to what is typically seen at other projects, just to provide us with some context.
Well, the 91% recovery we saw in the lab, I don't think I'd be naive. I thought they would translate directly into a DMS, a full-scale DMS in the field. But in my experience, it could easily translate into an 80% plus recovery. Now, 80% with DMS would be enough to justify that on its own, I think. Typically, you see 60% if you're lucky through DMS, and then the rest is recovered through flotation. There are many projects who don't get anywhere near 60 on DMS because by the time you get it to 10 millimeters, you haven't liberated any of the lithium from the spodumene, and it all needs to be crushed. The Goulamina project in West Africa, for example, is all flotation because DMS doesn't recover enough from it at all. It's not worth it.
Right.
So I think we're pretty lucky with that. We've got this huge outcrop that sits on the surface that we've done quite a bit of drilling on at the moment. We don't have a formal resource on it. I think we could put a resource out. I don't think it would be enough to impress the market at the moment because we haven't done enough drilling. But it's nice to know that with I think with a minimal amount, that's a relative term, of course, but a minimal amount of environmental approvals, we could get an operation going that's producing a 6% concentrate. And of course, the less capex you have to spend and the less time it takes, the less of a resource you need. Not that I'm predicting a small resource, but all of these factors, as you point out, sort of add to the viability of an operation.
Sure. And so your previous press release, it showed some encouraging visual results, including your maiden holes from the Jamar pegmatite, and that was previously undrilled. So, tell us what you're seeing in the core. You showed pictures, but, are you seeing spodumene crystals throughout the core? Do they look coarse-grained, fine-grained? Are they well mineralized with spodumene?
The green crystals I showed during my presentation in that core, in those core photos, that looks like spodumene. And what our geologists can do is they can estimate the percentage. Now, if we assume that spodumene, we can estimate the percentage, call it 20% visually, and eventually. So those samples, that core, for example, is on its way now to the lab, and within 6 or so weeks, we should have some results. When we do get those results back, we can then compare it to our visual observations, and in future, we can then start to get a feel for if I observe 20% spodumene in that core, then that generally equates to X% lithium oxide.
Gotcha. Okay, so yeah, it helps having those types of inferences, and your pictures show that it's very easy to tell where the pegmatite starts and stops. So what does this mean for when you're actively drilling? Does it mean you can adjust your next hole in real time without needing to wait for assays?
It definitely does, yes. Of course, assays have the final say, but there's always got to be that flexibility in the field. And in fact, we, as I alluded to before, we originally had 5,500 metres planned at Adina. We're now up to over 9,000 metres based on what we've seen in the drilling only in the last few weeks and in the gravity surveys we've done. If we at least half of that increase is based on us seeing that nice core and making some assumptions about that and increasing our drilling as a result.
And I want to touch on the geophysics. The gravity survey results look particularly interesting. It looks like it lit right up. So talking about the geology, why does gravity work with pegmatites? As well, I often hear that pegmatites are very hard to find if you don't have outcrop. Do you agree or do you disagree?
I agree, but I think we're learning more all the time. And I think gravity is one of the new ways. In Australia, when you don't have outcrops, geochemical soil sampling is the way we normally try to find indicator minerals for lithium, and that's often very useful, but not particularly useful in northern Quebec. So we need to come up with other techniques, and I think gravity does it. The reason gravity seems to show up the pegmatites is because there's a density difference between the pegmatite and that heavy surrounding amphibolite. So there's a different gravity response as soon as it hits the pegmatite compared to that denser rock on the outside. So that, for us, that's one of the best ways to overcome the lack, in some areas, the lack of outcrop. But of course, outcrops are an indicator. And it's becoming a very important technique for us.
So let's imagine you got no outcrop. The way that you'd be looking for it would be to look for these gravity lows, as well as coinciding maybe topographic highs.
Exactly right. Topographic highs, yeah, which are often hard to detect by eye, but the LiDAR survey can really highlight those.
Okay. So hole 5 in particular, that had two near 80-meter intercepts of pegmatite and separated by a 20-meter gap. And even within that gap, there was some pegmatite. So within this gap, do you think it's some intrusive body? Is it the host rock that's coming through, or is it something else?
We simply don't know enough yet to be able to comment on that. It does look surprising, because that's normally the sort of intrusion you would expect the pegmatite to do rather than the host rock to be intruding on a relatively narrow vein like that. So we're very much still trying to learn what's going on there, and going back to your previous point, that's the more we learn, the more it dictates the future drilling we do and where we drill.
Now we have a question circling back to the gravity survey. And I know you said that you're still awaiting some results, and you're still working on your gravity survey. So do you have an indication of whether that survey tells you if the Jamar and the Adina showings are linked?
That's the area we're finishing at the moment. We don't have anything conclusive on that yet, but we've got somewhere between 1 and 2 weeks of groundwork to go before we finish that, and then some processing of results. So within the next few weeks, we hope to have results out to the market and be able to make a prediction on whether they're linked. But of course, the easiest way is to stick a few drill holes in there, which we will eventually. But we're getting such interesting results over at Jamar at the moment. We don't want to take the drill rig over there until we fully investigate what's at Jamar.
Okay, and we have another question on hole 5, so we'll just coming back to that. So
I expected a few on hole 5.
Yeah, I mean, look, it looks exciting, honestly. Whether or not it was drilled down dip or maybe not exactly down dip, it's exciting nonetheless in my view. So when do you think we'll know whether or not it was drilled down dip? Has the model changed thus far, or how many more holes until you can figure out the geometry of this thing?
That's a very hard question to answer. I think we're drilling every say 3 days. we're drilling a lot deeper than we expected around that Jamar. So the hole we're just about to finish now is down past 300 meters, and we've got some pegmatite in there, which looks very nice. So the holes are taking maybe 3 or 4 days per hole. I'd say we're stepping out 75 meters at the moment.
Okay.
We think that's a good step out because it provides us. It'll be close enough to be able to get a resource eventually, and it gives us enough geological information. So I think when we've got a bit of a grid going at 75 by 75 over, say, half a dozen holes, we'll start to get some initial views, and then we'll be able to start to put some leapfrog models around what we're seeing. And I really look forward to that. And by that stage, I think it'll be another 3 or so weeks before we get a real feel for it. Hopefully by then, some assays, we're getting close to getting some assays, 3 to 4 weeks time. And then we'll really know if it's mineralized and how mineralized, and it'll really start to tell the story. So we're probably 4 to 6 weeks away from really having some information that we can put a model around.
Okay. So going back to Canset, you guys have an exploration target of 15 to 25 million tons, grading 1 to 2% lithium oxide. What's that target based off of, and how close will the maiden resource get to this, do you think?
That was done during our independent geologist report. So the geologist who put that together produced the exploration target, and they're always subject to interpretation, of course. I think the idea behind that is that if we were to throw a loose resource around the mineralized area we've currently drilled, it looks like it's 3 or 4 million tons there or thereabouts, and that's not defining a grade or anything. With some more drilling, we can definitely define some more there, and I think the theory is worst case scenario, there's only 5 million tons there, but we've just identified another 20 outcrops. A couple of those at least are going to be mineralized is the theory. And again, if a couple of those have got 5 million tons, you've suddenly got 15 million tons as on Canset. It would be pretty unlikely that only 3 million, call it 3 million tons that we can see there at the moment has just intruded and sits there on its own. There's going to be more, and we've got 20,000 hectares at Canset. So with that sort of thinking, that's how that target has come up. My view is that to put a maiden resource out, we need 8 to 10 million tons, which is appropriate to put a PEA around. And then, of course, we just build from there. In an ideal world, every 12 months, we add 10 million tons to it until you've got a critical mass to make a final investment decision, which is probably 30 to 40 million tons in my view. Could be less though if you're building DMS only.
Okay, that's some good targets. So trying to visualize now what you've drilled off right now, can you remind us what the pegmatite dimensions at both Cancet and Adina are, and then maybe compare that to the dimensions of the anticipated resource footprint?
At Cancet, we currently have 1,200 meters of pegmatite, known pegmatite. We don't know that all of that's mineralized yet. We've got 600 meters of mineralized pegmatite, and it's not particularly deep at Cancet. Most of it stops below 70 meters, and it's probably 20 to 30 meters wide. Excuse me. That's open in several areas and at depth. So we've got, as I say, after Christmas, we want to bring in some ground rigs and really do some infill drilling to increase that. I think given the stripping we've done now and the amount we've exposed, you can see what a big mass that is, and there's a lot of potential at Cancet. Adina it's a tricky one because 2 months ago we didn't know about Jamar, and we still don't know whether they're connected. If they are, there's a couple of kilometres there of strike length that could all be mineralised. And then, of course, the hole number 5 that we've just hit, if it's mineralised, appears very different to the previous drilling that was done back in 2018, but which looked like sort of 10 to 15 metre dikes parallel to one another, dipping pretty much vertically. So there's a lot of unknowns there. But if we continue to hit huge lengths of pegmatite like we currently are, then I don't really care what it looks like. It's going to be good news.
Yeah, for sure. So yeah, we're at an hour now, but I want to just ask you one final question, Chris. In your view, what are the top, call it 2 to 4 catalysts upcoming that you think will really re-rate your stock in the coming months?
Positive drill news is going to re-rate our stock, and as I say, it's very satisfying for me to see, knowing that the hard work that the team's done, and I keep calling it, it's not very exciting or sexy work we've been doing for the last 12 months, identifying drill targets, teams on the ground, geophysical surveys. Investors don't get particularly excited about that, but it's all leading towards this point where we've got drill bits in the ground, and that is the stuff investors like, and that's where we really add value to the company. So we're on the edge of it, and we can start to see it with some of these results already. We're adding real value to our company. So good drill results, and then ultimately a maiden resource at Cancet and Adina will be our big re-raters, and PEAs at each project, I think. And then on top of that, I think an acquisition, an expansion, however that occurs, to increase our footprint either in Quebec or in other provinces.
Okay, great. With that, I want to thank you for joining us. It's been a pleasure hosting you. And to our viewers, if you want to learn our thoughts on Winsome as well as other companies that we watch, we do publish all of our research on our website. That's redcloudresearch.com. It's free of charge. A reminder that our next webinar will take place tomorrow at 2 p.m. Eastern and 11 a.m. Pacific. Dave Talbot will be talking about uranium with Next Gen Energy. So thanks for tuning in. Have a great day. And thanks again, Chris.
Thank you, Kobe. It's been a pleasure. Thank you, everyone who tuned in.